Today, I'm going to try and predict the next Bitcoin dip. And if you can predict it better than me, you could share in Bybit's 1000 USDT daily prize pool. Now, Bybit just launched the Bitcoin Predict and Earn Challenge. And the goal is simple. Pick the lowest Bitcoin by low strike price that actually gets exercised. So this video is not just about whether Bitcoin goes up or down. It's about one clear question. How low can Bitcoin realistically go next? Here's how the challenge works. The event itself runs from May 11th until June 7th. Every day from 8 a.m. until 12 a.m. UTC, you can subscribe to a Bitcoin dual asset buy low product at your chosen strike price. The minimum subscription is 20 USDT. At settlement, your strike price needs to be exercised. And if your strike is the lowest exercised strike price among all eligible participants, you could share the daily 1000 USDT prize pool. There's also a second reward pool based on dual asset subscription volume with a volume leaderboard. But today, we focus on the main part, predicting the actual dip. And this is not just randomly picking the lowest number. If your strike is too low, Bitcoin may never reach it. But if your strike is too high, someone else might pick a lower exercise strike and beat you. So the real skill is finding the deepest realistic dip. Low enough to compete, but realistic enough to actually get exercised. And that is why we need technical analysis. Right now, Bitcoin has pumped hard from the lows. The market is getting excited again. People are starting to call for a new bull run. But when we zoom out, the chart might be telling a different story. So when we look at the chart, we see something that looks a lot like previous bear market rallies. A strong bounce, a retest of the last level, and Bitcoin still below a major weekly trend line. That creates the risk that this move is not just the start of a bull market, but just another trap before lower prices. Because yes, Bitcoin is pumping, but a pump does not automatically mean the bear market is over. In fact, some of the strongest rallies happen inside bear markets. In 2022, for example, Bitcoin also had aggressive bounces. One of those bounces was around 45%. Now people got bullish again. The market looked like it was recovering, but after that, Bitcoin still made a new low. And right now, we may be seeing something similar. Not exactly the same, but similar enough that we need to be careful. So before we pick any Bitcoin dip zone, we need to zoom out. And the most important level on the chart is the weekly EMA 50. The weekly EMA 50 is basically a trend line that helps us see the bigger picture. It is not magic, it is not perfect, but it is a very useful level to watch. When Bitcoin is above it, the market usually looks stronger. When Bitcoin is below it, you have to be more careful. And right now, that is the problem. As long as Bitcoin stays below the weekly EMA 50, I cannot fully trust this rally. Yes, the pump looks strong, but strong pumps are normal in a bear market. And the weekly EMA 50 also gives us a clear invalidation point. If Bitcoin breaks back above it and holds it, then we have to respect that strength. And at that point, the bearish view becomes weaker. But if Bitcoin rejects below it, the rally starts to look like a retest. And that is exactly what often happens in bear markets. Price breaks down, then price bounces. Everyone gets excited, but instead of starting a new bull market, Bitcoin only retests the level it lost before moving lower again. And that is why I do not want to get emotional here. I do not want to say bull market just because we had a green candle. I want confirmation. And for me, confirmation means reclaiming the weekly EMA 50. And until that happens, I stay cautious. So when I think about the Bybit challenge, I'm not looking for a moon target. I'm looking for the next support zone below us. Where are buyers likely to step in? Where is the liquidity? Where could Bitcoin realistically dip before bouncing again? That is the real game here. And for example, if Bitcoin is trading around 80k, I would see the conservative zone around 78 to 79, the realistic zone around 75 to 77, and the aggressive zone around 70 to 73k. So my prediction is this. I'm not fully bullish yet. Bitcoin still needs to prove itself. If Bitcoin reclaims the weekly EMA 50, the bearish case gets weaker. But if Bitcoin rejects below it, this could still be a bear market rally. And then the next dip becomes very interesting. So for the Bitcoin Predict and Earn Challenge, I will not try to pick a random low number. I will look for the lowest, deepest, realistic dip. A level that is low enough to compete, but still realistic enough to get exercised. That is what makes this challenge interesting. It's not just guessing, it is about reading the chart, understanding risk, and trying to find the right downside level. So now I want to know your prediction. Where do you think Bitcoin dips next? Drop your Bitcoin target in the comments below. And if you think you can predict the dip better than me, Check out the Bybit Bitcoin Predict and Earn Challenge through the link in the description. Oh, and remember, this is not financial advice. Dual asset products are risky and crypto is volatile. Always read the official terms and conditions before joining something like this. Stay sharp, manage your risk, and never get too bullish just because the candles are green. Thanks for watching the video. Subscribe for more.